So what assets do you like right now? And I'm sure you're going to put energy in the mix, given what you said earlier on in this interview.
Yeah, I really still like energy stocks. I think they're significantly undervalued. I mean, a lot of these things are trading 5 times cash flow and things still. And that's basically just a signal that investors think that they are at a cyclical peak, that oil prices are going to be peaking out. From a purely technical standpoint, the oil price to me has traced out a typical bullish flag pattern over the last, several months, 4 or 5 months. If that, is a valid reading of that, then the oil price could break out to the upside sometime over the next few months and really surprise people on the upside. I'm talking, $150, $200 a barrel. If that, happens, then obviously the valuations for oil companies, oil producers and things is silly at today's prices. But I generally think investors need to focus on real assets right now. I think gold prices are dramatically undervalued given where real interest rates are today. I think precious metals generally.
Sorry to interrupt, but just in your answer, can you address why gold hasn't done as well as people thought? Given, kind of do a Druckenmiller exercise. If we went back 2 years and said, okay, look, this is what's going to happen. Central banks are going to print, $20+ trillion, worth of monetary stimulus. Fiscal stimulus is going to support that, and then inflation's going to rocket off to above 9%. I think we all would have predicted a much higher gold price than we are right now. So in your answer, if you can just explain why.
Absolutely. So when you have negative real interest rates, that is the bullish backdrop, the most bullish backdrop you have for precious metals prices. The reason it hasn't been for the past couple of years, we've been in a pretty significant sideways pattern for precious metals, is I think 2 things. It's the dollar. The dollar has been pricing hawkish Fed policy for, and especially this year, right? But really precious metals prices have held up relatively well relative when you look at the strength in the dollar. But that's one thing. I think investors are pricing in a hawkish Fed. And when you look at the other side of it, break evens. Essentially, for better or worse, the gold price is tied to the TIPS price, break evens. Right now, break evens are pricing in a rapid, reduction in inflation. And so I think basically by saying gold's undervalued, I think TIPS are undervalued, that break evens are not, break evens are going to be dead wrong on where inflation is in 2 years, 5 years, 10 years from now. I think inflation is going to be much higher than break evens are pricing in. If that's, correct, then, the gold price is really going to take off. And there's really, no reason to believe that gold prices should be tied to TIPS going forward, right? I think before this bull market in commodities is over, you're going to have, a lot of these relationships are going to, go to the wayside. And we're going to see the, the type of sentiment that we saw in meme stocks, in January of 2021, this to the moon, all these types of, stocks only go up. We're going to see that kind of sentiment in commodities. We're going to see that kind of bullishness in oil towards oil price. We see that bullishness towards precious metals before this commodities bull market is over. And so that's why I think we're still in the very early stages of the commodity bull market. And positioning there too is very bearish. We saw managed money traders in futures, gold futures, go net short recently. That's usually only seen at important lows for precious metals. You still have producers in gold and in silver very bullishly positioned. So I think there's a very strong bull case to be made for precious metals going forward.
All right, great. So, and I did interrupt you a little bit there. So if there's anything more to add in terms of other assets you like, please add them. But we got energy stocks, we got precious metals, maybe even TIPS a little bit, commodities in general. When you talk about these plays, you say you don't like financial assets, but most people, the common way for them to get exposure to these sectors is by buying stocks, either ETFs on the commodities themselves or buying producers or other players in the sector. Is that the way that you would sort of generally tell the average person to look into this, or are there other vehicles you would encourage them to look at?
No, I do like, I like owning, I don't want to own, the oil price. I don't want to try and roll oil futures or anything like that. So I would rather own the producers there. I think the energy infrastructure companies are still really attractive. Pipeline companies, those types of things, they're still paying, 8 to 10% yields in dividends. And they're priced as if we're going to stop using, fossil fuels in the next 5 years, which is ridiculous. We're going to be needing this type of energy for a long period of time. And so the valuations of these things is still pretty cheap. I do like precious metals mining stocks. I think they're dramatically undervalued right now, but I also do want to own some gold and silver, physical, as well. I think that's something that's a lot easier to own than other commodities. So I do like those. And I'll say too that there are, I generally don't like the equity market because I think that, it's dramatically overvalued still. But within the equity market, we are starting to see a lot of interesting opportunities where you are seeing insider buying and valuations come down to attractive levels, especially back in mid-June, there were stocks that had very heavy insider buying and got to levels that were just unjustifiably cheap. And so I do think there still is opportunity in the equity market, but as you said, you need to be very tactical. You need to be very bottom up, and really pick your spots.
All right, thanks. And you're making sort of an indirect plug for the active managers that Wealthion refers people to, who can help them put together, a portfolio and a strategy to target those types of companies. If you enjoyed this video clip, click here to watch another one you should like.